Hey guys, welcome back to my YouTube channel. I am Takia Comey, your South Florida realtor and relocation specialist, and I am back with another video. So what is up? So today's topic will be the do's and don'ts when it comes to purchasing a home as a first-time home buyer. Now, I thought this was a great video because I usually talk about it on my TikToks in a shorter form, but I thought this would be great so I could explain it more in depth and detail for you guys who are interested in purchasing a first-time home. Now, you don't have to be in the same state as me. This can apply to anyone, whether you're purchasing a home in California, New York, Washington, North Carolina, it doesn't matter. This is perfect for any home buyer looking to purchase a home. So one of the first do's that you want to make sure that you do before you even reach out to a professional, whether it be a realtor or a lender, you want to see where your credit lies. Now, your credit is very important in the process of purchasing a home. There's no set number that you need to purchase a home. I don't know the myths that say you need a 700 or 800 credit score to purchase a home. That is totally false. You can purchase a home with as low as a 580 credit score or even a 620. So there's no limit. However, I would recommend that your credit lies between anywhere of a 620 or a 640, depending on which type of loan you want to utilize. Also, keep in mind that certain down payment assistance require that you have a certain credit score. So it's very important that you kind of stay above or at that limit. So what I've seen, the best credit score that you could start with will be a 620 or a 640 credit score so that you can qualify for anything that you're applying for. Now, with FHA, all you need is a 580 credit score, but higher the credit score, the better, because it will also help you with your interest rates and your pre-approval amount. So it's best to make sure that you have that credit score. There are many different ways that you can check your credit. I would not recommend Credit Karma because we all know Credit Karma is sometimes usually off. I always say that Credit Karma is usually off by 20 or 30 points when it comes to looking at Credit Karma. Yes, you can get an idea of where you stand, and yes, it's a free app, but there are other resources that you can utilize, such as Experian or even My FICO Score. Now, if you want to see all three FICO scores, you may have to purchase the higher plan, not the free plan, if you want to have access to that. But you can also log in. If you have a credit card, you can log into your app and it'll also show you your FICO score, but it may only show you one. There are many different ways that you can fix your credit score on your own before even going to a credit specialist. I would recommend that if you have any high payments on your credit cards, that you try to pay those down. Keep it anywhere between a 10% or a 30% utilization. The lower, the better. I'm not saying that you have to pay it down to 0%, but if you keep it to a low utilization, that will help you on your buying power. Other ways that you can increase your credit if you don't have many credit cards or your credit cards are already paid down, you could also be stated as an authorized user on maybe a close family member that they are really good with their payments. They could put you as an authorized user, so whenever they pay their cards down or their credit increases, then that may help you with your credit limit as well. Another thing that's very, very important is save your money. Now, there's no exact limit. You don't need 20% down to save on a home. However, it is best that you have a great amount. Keep in mind, the down payment, if you're using FHA, is 3.5% of the purchase price. And then the closing cost is usually anywhere between 4% or 5% of the purchase price. So add those two numbers up and at least have that amount if you're not using down payment assistance. But even if you are using down payment assistance and you have someone who's going to give you that down payment, you still want to have enough money just in case if you run across any repairs that may need done, or when you're ready to purchase your furniture. You don't want to buy a house and be house poor with no furniture. Also, depending on the market, whether it be a buyer's market or a seller's market, you may be able to get seller's concession depending on how motivated the seller is, but that's not always guaranteed. So you don't want to depend on the seller to give you any funding when it comes to purchasing a home, because you never know. You may find a home that doesn't need any repairs and you may not need a seller's concession. So you want to weigh your options and make sure you have enough money saved just in case. You want to also pay off any debts that you may have. I know a lot of people are saying like their student loans are on hold and they don't have any student loans at the moment. But a lot of times I hear my lenders let the buyers know that it's best to put it on an IDR where you are making payments on your student loan so that amount won't be seen as a whole, but it will be seen as you're making a payment plan. So it's always good to reach out to your lender to see what's the best option that it comes to when it comes to student loans. But any other debts that you have, if you took out any other loans, such as like a cash loan or anything like that, those may show when the lender is pulling to see your debt and all of the items that you owe. One of the most important things that I would say for a do is you want to get pre-approved by a lender. Now, many times people don't know if they should talk to the realtor first or they should talk to the lender first. Either way, it can go hand in hand. If you have a trusted realtor, most of the times they have a trusted lender that they go to, a mortgage loan originator who can do the loan for you. Or if you find the lender first, they may have someone who they work side by side with as a realtor, and they may refer you to that realtor. So the reason being that you want to go to a lender first before you start the process and before you start looking at any homes is that you don't want to go on Zillow and find this perfect home that you think, oh my God, I absolutely love it, and then to come to find out you can't afford it. So that's why it's best to get your pre-approval first, so then you'll know how much of a home you can afford and if it's actually within your budget. So most of the times a lot of people want to have their pre-approval at a high amount. Let's say if it's $500,000 or $400,000. In this time of a market, because of the interest rates, your mortgage may be high. So a lot of people don't consider, okay, what do I want to pay for mortgage every month? What am I comfortable with? So that is another due that you want to get in place before you even start looking, before you even go to your lender. Know that amount in your head. How much am I comfortable with paying every month as a mortgage? So that way you won't end up losing your home to foreclosure. Best to understand what your borrowing capacity is. As far as, because I've seen people get a pre-approved for $450, which is great because the houses are a lot much nicer, they don't have much work to be done, and it's a decent size. But then when we told her what her monthly mortgage will be, it was way out of her budget of what she wanted to spend. So yes, you may have a high pre-approval amount, but then you might want to come down to reality when it comes to your mortgage of how much you want to pay monthly. And I was in that same predicament when I first started looking for a home 2 or 3 years ago. I wanted a high pre-approval. I think I got pre-approved for $325. But based off of what that monthly mortgage would have been, that wasn't something that was realistic in my price range for what I wanted to pay. So therefore I had to find a home that was around $300,000, which a lot of people sometimes have to come into that reality depending on what you want to pay. And that's why I say it's best to partner with the lender. For example, my lender, when we're doing the pre-approval consultation, he'll show you as far as what your down payment will be, an estimate of what your closing costs will be, and also an estimate of what you're going to pay every month on your mortgage. Make sure that you get a pretty good lender who's able to give you all of those tools and things before you even go into this home buying process, so that way you'll know if this is something that you can afford or not. Worry, even though you have gone through the buyer's consultation, before you submit an offer, if your lender is that good, such as mine, that lender, you can ask them for a loan estimate before you even put in an offer on a home, so that way you'll know based off of the numbers that they're running as far as if the home has an association, the asking price, you'll be able to know where you stand before you even commit to that home. So it's always good to find that out first before you begin that process. So the do's are really simple. Not to say that this is all of them, but these are some of the most important ones that you want to look into before even getting into the process of purchasing your home. Now, when it comes to the don'ts are very, very, very important. You don't want to go ahead and open up a new line of credit, meaning a new credit card, whether it be you buying a car or even you co-signing for someone with a car. If you decide to buy a car, that could increase your debt and it will limit your buying power. So it's very important if you're considering buying a car that you wait until after the home buying process for you to make that big purchase, and then you can go and buy a car. Another major don't is making large deposits. Now, I know we said have your cash available, which is your financings in place. However, you don't want to have money on hand, or mattress money as they like to call it, or the money in your safe. When you're purchasing a home, you want to make sure that the money is accounted for in a bank account, so that way they can see where your finances lie. If you're thinking of purchasing a home, you don't want to put the money in the day before you go get your pre-approval or even the month before. You want to make sure that cash is sitting there for at least 2 to 3 months so that they can verify where those finances are coming from. Also, if you decide that you wanted to get a gift from someone or someone's giving you the money, you don't want to take that money and put it in an account that same day, that same week, or when it's time for you to do your escrow. You want to talk to your lender about using these funds and what's the best way to go about it. If receiving a gift, this person should also have the money in their account so that it can be accounted for, and it's not a surprise as to where the money comes from. Another important factor is not changing your jobs. You want to make sure you have at least a 2-year work history. Now, there's a lot of ways around this depending on what kind of loan that you're using, but they want to see that you have a steady income. So if you were to change jobs, you want to make sure that it's in the same short time frame, not a year time frame that you switched your job over in between. You don't want to have any gaps. But if you are changing, you don't want to go from being a doctor and then all of a sudden now you're a police officer. It could be in the same field as a surgeon going into being a gynecologist. You want to make sure they're in that same field and not something extremely outside of what you were already doing. So don't change your job, don't quit your job, and try not to retire until you close on your home. For me, that was one of the biggest mistakes that I feel like I made. Was I quit my job before I decided to purchase an investment property or a home, because I had the income, I had the finances, and everything was in place. But as soon as you quit your job, if you're not moving over to something that's in the same field, this could be a big impact on you, and you may have to wait some additional years. Don't always assume that you need 20% down, because in reality, you don't need 20% down. And honestly, who has 20% down? So you want to make sure, like I said before, you have at least, I would say 10% already saved. But it's always good to have an extra cushion, because if you're using FHA, like I said before, you only need 3.5% to put down, and then 4 to 5% of the closing costs. If you're thinking about purchasing furniture, you want to wait until you close on your home to purchase the furniture. You don't want to make any purchases that will show as a red flag on your credit or your debt. So just hold off on that. I know you're super excited, but you want to save that until the end, after you get your keys and you made it to the closing table. So these were just a few do's and don'ts as for first-time home buyers who are considering purchasing a home. I know there's a lot more to it, but these are the main factors that you want to consider and think of when it comes to purchasing your home. But if you're looking for more home buying tips and tricks and updates, follow me for more. You are on Instagram, social media, TikTok. Our social media username on all of my platforms are She Sells Miami, so you can follow me there for more quick tips and tricks. Thank you guys for watching my YouTube channel. Make sure you hit that like button down below, that subscribe button, and that notification bell so you can see any videos that I post. You'll be the first one to know about it. You guys have a good one. Stay safe. Peace.